You've done everything right. You've built a successful career, invested in the stock market, and maybe you even own a few rental properties. You've been playing the wealth creation game, and by all accounts, you're winning. But what if I told you the real playbook for generational wealth is often kept behind closed doors? What if the strategies that create true, unshakable financial freedom are reserved for a select few who know where to look? This isn't about working harder. It's about accessing a different system entirely. The public is taught to chase 401ks and single-family homes. But for accredited investors, that is just the starting line. The next level of wealth generation, the kind that can outperform public markets and legally reduce massive tax liabilities, is happening in the private market. It's happening in an asset class that is quietly becoming the backbone of institutional portfolios. In the next few minutes, I'm going to pull back the curtain and show you how accredited investors are accessing private, institutional-grade apartment deals for returns and tax advantages you simply won't find anywhere else. This is the game changer you've been looking for. So let's be honest, you've reached a level of success most people can only dream of, but it comes with its own set of sophisticated problems. Your stock portfolio, while valuable, is subject to terrifying volatility. One headline, one geopolitical event, and it can feel like years of gains are evaporating overnight. There's a constant sense that you are not in control. So you diversified into real estate. You bought a few single-family rentals. And you thought it would be passive income. Instead, you became a landlord. You're dealing with calls from tenants or property managers, unexpected repairs, and the constant headache of managing multiple properties in different locations. And the real issue? It doesn't scale. Do you really want to own 50 separate houses with 50 separate roofs, 50 separate problems, and 50 separate insurance policies? It's a recipe for burnout, not freedom. And then there's the tax bill. Every year, you write a check to the government that feels like a penalty for your success. You're at a high tax bracket, and it feels like you're working the first few months of the year just for Uncle Sam. You've talked to your CPA, and they offer the same standard advice. Max out your retirement accounts, and maybe some tax loss harvesting. But none of it really moves the needle. You've hit a ceiling, a wealth-building plateau where the old rules no longer apply, and the path forward is not clear. I know this feeling because I've personally lived it. I had the successful career, the six-figure stock portfolio, and a collection of rental houses that were supposed to be my ticket to freedom. Instead, they felt like a second job. I was spending more time managing property managers than I was enjoying the fruits of my labor. My wealth was growing, sure, but my time, my most valuable asset, was shrinking. And my tax bill was suffocating. I realized that the strategies that get you to your first million, or even your first 10 million, are not the strategies that create true legacy-defining wealth. So I started talking to people who were operating on a completely different level. Investors who control hundreds, even thousands of units. They weren't landlords. They were capital allocators. They weren't worried about market swings. They were insulated from them. And they weren't paying astronomical taxes. In many cases, they were paying close to zero taxes. They weren't buying houses. They were buying apartment buildings. Not fourplexes or 10-unit buildings, but large-scale 100, 200, 500-unit institutional-grade properties. And they were doing it through a structure that is largely inaccessible to the general public. Real estate syndication. This discovery completely changed my understanding of wealth. It was like I'd been playing checkers and someone had finally showed me the chessboard. So this is where the game truly changes. Investing in large multi-unit properties through private syndications is built on four powerful pillars that solve every one of the problems we just discussed. Pillar number one, exclusive access to institutional-grade deals. As an accredited investor, you have a legal advantage. The SEC allows you to participate in private placements that are off limits to the vast majority of the population. This isn't about being special. It's about the government recognizing you have sophistication to evaluate complex deals. This grants you access to real estate syndications, where you can pool your capital with other accredited investors to acquire massive, high-quality assets, like a $50 million apartment complex, that are typically bought by pension funds and insurance companies. You get to co-invest alongside seasoned professionals who have decades of experience and institutional backing, without ever having to deal with a tenant or a broken toilet yourself. And while any investment carries risk, this structure is designed for passive income. Pillar number 2, the power of unbeatable scale. Imagine the difference between managing one 200-unit apartment building versus 200 single-family homes. With the apartment building, you have one roof, one property tax bill, and one full-time professional management team on site. The efficiencies are staggering. If you have a few vacancies in the 200-unit building, your cash flow is barely affected. But if you have a few vacancies and a small portfolio of single-family homes, your income can be wiped out. This scale creates incredible stability for your portfolio. It also allows for better financing. Lenders love large multifamily assets, often providing non-recourse loans with higher leverage, which means your initial capital controls a much larger, more valuable asset, amplifying your returns. Pillar number 3, radical tax efficiency. This is without a doubt the most powerful and misunderstood advantage. When you invest in a large multifamily property, our team performs a sophisticated engineering-based analysis called a cost segregation study. Instead of depreciating the entire building over 39 years, we can break it down into its components. Things like carpets, appliances, and landscaping can be depreciated over much shorter time frames, like 5, 7, or even 15 years. And now here's the magic. Thanks to tax law changes in 2025 that restored 100% bonus depreciation, we can often deduct the entire cost of these shorter life assets in the very first year. Let me give you a real-world example. On a hypothetical $1 million investment into a syndication, the cost segregation study might identify $400,000 of that as shorter life assets. With 100% bonus depreciation, you could receive a $400,000 paper loss in year 1. For an investor, that deduction can offset other passive income from real estate, potentially saving you tens of thousands in actual tax dollars. It's important to note that under IRS rules, these passive losses generally cannot offset your active W-2 or business income unless you qualify as a real estate professional, which is the topic of another video. But you still get a powerful tax benefit while the property itself is generating cash flow and appreciating in value. It's the ultimate trifecta: cash flow, appreciation, and massive tax savings. Let me know in the comments, what has been your single biggest frustration when it comes to taxes on your investments? Pillar number 4, true diversification and risk mitigation. Diversification isn't just about owning stocks and bonds. True diversification means owning assets that don't move in lockstep with the public markets. Multifamily real estate provides just that. People will always need a place to live, which creates resilient and predictable demand, even during economic downturns. Plus, by investing in a large syndication, you're not just buying one door. You're spreading your risk across hundreds of units. Many accredited investors even diversify across multiple properties in different geographic markets, protecting themselves from a downturn in any single city. While some markets like Austin and Phoenix are currently working through an oversupply of new units, other markets are seeing robust rent growth due to strong demand, driven largely by unaffordable single-family home prices. This strategic diversification is something you simply cannot achieve on your own with a few rental houses. Beyond the incredible financial benefits, investing in multifamily properties has a profound positive impact. There's a significant housing shortage in this country, and by funding the development and improvement of quality apartment communities, we are part of the solution. Well-managed properties with great amenities like gyms, co-working spaces, and community events don't just attract better tenants. They build stronger, more connected communities. They become places where people are proud to live. This isn't just about financial returns. It's about building a legacy that contributes positively to society by providing safe, quality housing for hundreds of families. You've worked too hard to let your wealth stagnate or get eroded by taxes and volatility. You've reached a point where standard financial advice no longer serves you. The next level requires a different playbook, and you now have the foundational pages. Accessing these private, institutional-grade deals is the defining characteristic of sophisticated wealth building in this decade. If you're an accredited investor and what I've shared today resonates with you, if you're ready to stop being just a successful professional and start being a strategic capital allocator, then I invite you to take the next step. I've put together a resource for our accredited investors that provides all the information you need to invest with confidence in multifamily syndications. There's no cost and no obligation. It's simply a chance for you to better understand what these game-changing investments look like. Click the link in the description below to access our wealth building guide and see if this strategy is the right fit for the next chapter of your financial journey. The gap between being wealthy and being truly free isn't about how much money you make, but about how hard your money works for you. Investing in multifamily properties through private syndications is the most efficient vehicle I have ever seen for generating scalable passive income, achieving radical tax efficiency, and building lasting generational wealth. Stop playing the game that the public is taught to play. It's time to step onto the real field. It's time to change the game. Thanks so much for watching. If you got any value out of this video, do me a favor and like, subscribe, and hit that little notification bell so you don't miss my next video. I'd also love to hear your thoughts and answer any questions you have, so make sure to leave them in the comments below. And as always, I'll see you in the next one.